Dirty dealings, corporate battles, consumer woes. This is Evening 5. AMMB Holdings, the country's sixth largest banking group by assets, on Tuesday reported a 32.2% gain in its first quarter net profit due to sharply lower impairments and higher interest income. Net profit for the quarter came in at 500.2 million as net impairment charges declined to 12.3 million from 190.4 million ringgit, partly helped by higher forward-looking reversals. Net interest income rose 6.4% to 860.9 million, while non-interest income fell 19.2% to 317.6 million due to lower trading and securities gain. No dividend was declared for the quarter. Looking ahead, AMMB plans to prioritize the growth of its small and medium-sized enterprises and mid-corporate segments to drive lending expansion. In addition, the bank aims to enhance its wealth management services and develop efficient supply chain solutions to better serve customers. CEO Jamie Ling said that AMMB has made a great start to the new financial year as it executes its Winning Together or WT29 strategy, and the bank remains optimistic about its FY 2025 prospects. The net interest margin, a measure of profitability from interest charged on loans after paying returns on deposits, expanded 13 BPS to 1.89%. In the first quarter, gross loans, advances and financing grew 2.9% from a year earlier, mainly led by growth in business banking loans. Overall expenses rose 2.5% from a year ago, pushing the cost-to-income ratio up to 44.2%. The Common Equity Tier 1 capital ratio, a measure of the bank's capital strength, improved to 13.24% thanks to risk-weighted asset reduction from repayments and improved reserves from the fair value through other comprehensive income portfolios. Newly listed Johor Plantations Group saw its net profit nearly quadruple for its second quarter thanks to higher prices and sales volume. Net profit came in at 49.74 million compared with 12.65 million previously. Revenue for the quarter came in 35% higher year-on-year at 360.9 million ringgit. The group also declared its first interim dividend of 1.25 cent per share. Moving forward, Johor Plantations said that it will continue to drive its operational efficiency, particularly in improving its yield, oil extraction rate and plant, as well as accelerate mechanization and digitalization efforts. Prices of the edible oil used in everything from lipstick to diesel have fallen about 15% from this year's peak on April 3rd amid decline in competing oils, while a stronger ringgit makes palm oil costlier for importers. Output is also expected to pick up seasonally, blunting the impact of gains in demand. The planter achieved an average selling price of 4,211 ringgit per tonne for CPO in the second quarter, up 1.5% year-on-year, while the average palm kernel price rose 17% to 2,611 ringgit per tonne. For the first half, net profit more than doubled to 99.71 million ringgit as revenue improved by 26% year-on-year to 655.8 million from 519.6 million ringgit. South Malaysia Industries has received a takeover offer worth more than 47 million ringgit from a group of its major shareholders. Francis Leong Seng Wee and two subsidiaries of tech-based industries are offering 45 cents per share to acquire the rest of the shares they do not own. They currently control more than half of SMI's issued shares. The remaining shares comprise 104.86 million, bringing the total takeover offer to 47.19 million ringgit. The offer price represents a premium of 11% to SMI's closing price of 40.5 cents on Monday. SMI's stock surged 12% to 45.5 cents on Tuesday before trading in the counter was suspended. Leong is currently SMI's largest shareholder with a 30.67% stake, while the two subsidiaries of tech-based, namely Honson Apparel and HIQ Media Malaysia, collectively own 19.38%. The three parties today entered into a collaboration agreement to formalize their cooperation to jointly exercise their voting rights and to obtain control in the management of SMI and its subsidiaries. The offer is intended to maintain the listing status of SMI on the main market. Honson had made several attempts in the past to wrest control of SMI's board. However, back in March, SMI filed a complaint against Honson and persons acting in concert, alleging that they had taken control of over 33% of the company's holding without making a mandatory takeover offer. Star Media Group reported a steep jump in earnings for the second quarter when net profits spiked to 7.49 million from 791,000 ringgit as profits from its property development segment offset widening losses at its mainstay print business. This makes it Star's best quarter since the third quarter of FY 2020 thanks to higher progress billings from the Star Business Hub project. Revenue for the quarter increased 28% year-on-year to 74.13 million from 58 million ringgit. No dividend was declared for the quarter. For the first half, net profit more than tripled to 7.3 million as top line grew by 16% year-on-year to 127.4 million ringgit. Looking ahead, Star expects the advertising industry to remain challenging in the second half of FY 2024. However, the group said it will continue to monitor business conditions, ensure operational efficiency, and practice prudent cost management. The company also added that it will continue to explore potential merger and acquisition opportunities to diversify its income stream. Willowglen MSC says it has secured a contract worth approximately 42.84 million from the Ministry of Education in Singapore for the design, supply and installation of security systems. In a BOS filing, the computer-based control system supplier said the contract was awarded to its wholly owned subsidiary Willowglen Services. The contract, which will commence on August 29th this year, will be completed by February 28th, 2026. The company says the contract is expected to contribute positively to the group's earnings and net assets per share for FY 2024 and FY 2025. Willowglen adds that the contract is not renewable and the risks in respect of the contract are the normal business risks.